Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex Quick Look and take a look at the dollar versus Canada. Recall from last week, the Bank of Canada did cut rates by 25 basis points. The Federal Reserve is expected to keep rates unchanged this week. That should weaken the Canadian dollar versus the U.S. dollar. And indeed, the price did move higher last week and is now moving higher in trading here today. But that was helped a lot by the U.S. jobs report, which came in a little bit stronger than expected. So what are the technicals telling us? I'm going to go through that in this video, so let's get started. Let's start by taking a look at the daily chart, just to get the overall view here. And there is more of a bullish bias. Why we're above the 100 and 200-day moving average. That's it. If we're above those moving averages, the bias remains more to the upside. But you can see there's been a lot of ups and downs in this currency pair, going back a number of months, all the way back to 2022, as a matter of fact. And we aren't near are heading up near the highs, but we aren't at the highs. The high price from 2023, it looks like, came up to around the 138.98. We're currently trading at 137.67. So we're within, 130 or so pips of that high, but still not there. Nevertheless, the price is moving to the upside in trading here today and trading near the highs from the month of May. So that is more bullish, and again, we're above the 100, 200-day moving average. So let's take a closer look at the hourly chart and see what the price action is telling us. And as you can see, the high price today just coming up just short of the May high price of 137.84. Our high price today has come in at looks like 137.81. So just 3 pips away from that May high. If we get above that level, it opens the door for further upside. In trading here on Friday and going back in time, the price did move sharply to the upside off of the U.S. jobs report, and in doing so, we headed above this trend line here, connecting recent highs. We also moved further away, or rocketed away, I should say, from moving averages below, including this 100 bar moving average, the 200 bar moving average on the 4-hour chart, the 200-hour moving average, the 100-hour moving average. All those moving averages were in this area right here, and the price took its cue from the jobs report and surged to the upside. Now, that move to the upside also moved above these more recent swing highs that go back to the month of May. Swing high, swing high, swing high between 137.34 and 137.42. And note here that the price moved above it and then corrected back down to the high of that level, found support buyers and moved higher into the close on Friday, closing right around this level, around the 137.64-ish type level. And in trading here today, the price has been up and down, but as mentioned, it did get within about 3 pips of the May high, but found willing sellers against that level. It's not unusual, I guess. If there's a level to lean against, and the price has risen sharply over the past 2 days or so, the sellers will lean against that level with the stop on a move above, and that seems like what they have done. On the downside, it would take a move below the 61.8% retracement and also this swing area to increase the bearish bias and get the buyers worried that this was a false break to the upside. But until then, the buyers remain more in control. You might have to be more patient, but we'll see if the market can rotate to the upside and get ourselves, ultimately outside of this trading range that's been dominant for the dollar versus Canada going back quite a long way. So that's my technical look at the dollar versus Canada. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.